Okay, so today we're going to do something a bit different on the Orange Wheel podcast. Instead of interviewing a guest, I'm going to take the audience through a little bit about Orange Wheel, about what we want to accomplish, about the role we fulfill within the ecosystem, and the types of people we're trying to support. So this is a brief introductory deck that I'll just step you through presently. So a little bit about myself. I'm the founder of Orange Wheel. I'm a Canadian national. I have a background in the energy sector. I studied as a chemical engineer and worked in the Canadian oil and gas industry for the first 5 years of my career in kind of technical roles initially, production and reservoir engineering, and then moving more into business development type roles, working on acquisitions and divestitures. In parallel to studying my CFA designation. Came to Europe 13 years ago in 2012 and took a sabbatical year. That's when I discovered Bitcoin and went down the Bitcoin rabbit hole. Then did my MBA at INSEAD and thereafter began working at BCG as a management consultant in the energy practice in the Nordics. So based in Oslo at that time, but servicing clients globally. Then I rejoined industry here in Copenhagen with Maersk, joined the corporate strategy team at Maersk Oil, later on with Maersk Drilling. And then I joined Bitpanda and helped them develop their first strategy function during the hypergrowth phase in the last big Bitcoin bull market cycle, 2021, 2022. Started Orange Wheel earlier this year and have been focusing now on this business as well as a few other related businesses. But Orange Wheel Consulting is the core focus of mine right now. So just to reiterate, I'm a chartered financial analyst, charter holder, CFA charter holder, engineer, MBA, Canadian national, specializing in corporate strategy and finance. So the macro theme that Orange Wheel is all about has to do with Bitcoin, but it's a term we're coining as the monetary transition. This move from a fiat debt-based monetary system that our global financial structure is built on top of into a Bitcoin-backed monetary system. We expect this to unfold over several decades. Arguably, it started with the Bitcoin white paper and Hal Finney beginning to run a Bitcoin node back in 2010. And we think this transition is going to continue and likely even going to accelerate in the coming 5 to 10 years. So I think most Bitcoiners are aware of this thesis, but maybe not the terminology associated, but maybe just worth mentioning that the fiat-based debt-based monetary system has structural and systemic flaws inherent to it, which ultimately are reaching a breaking point today. It does tend to lead to expansion of debt, which ultimately can then become unsustainable given the nature of geopolitical conflict and democratic institutions and deflationary technological developments. So it's incompatible with the types of other institutions and technologies that we as a human society are developing. Ultimately, the current system as it stands really only has one typical kind of way of dealing with these inherent contradictions, and that it ultimately becomes to conduct what's called financial repression, basically running inflation, a positive nominal growth, but a negative real growth rate. So creating more money entering the system through things like monetary and fiscal stimulus, and ultimately debasing the currency in order to prop up the asset prices, namely the bond market. What this ultimately leads to is a situation where people who hold wealth find it very difficult to preserve that wealth without taking inherent risks and speculations in the equity markets or other more speculative asset classes. And this then also tends to lead to widening wealth inequality, the Cantillon effect, and so forth, which leads to a situation where asset holders can benefit through the expansion of monetary supply, whereas wage earners find it harder and harder to just stay where they are and kind of fall behind. And this ultimately then leads to kind of tension within society, social conflict, social unrest, erosion of trust in institutions. And I think we're seeing that most notably in certainly in Western Europe and also in the United States, all kind of developed nations globally, and these kind of fiscal crises that are unfolding as we speak in the UK, France, Japan, and so forth. So that's the current system. There's a whole history in terms of how we got there. I'm not going to go into that today, but this is where we stand today. And now there's kind of a viable alternative. So prior to Bitcoin, the only real alternatives were, it was a relative system. So all of the economies in the world had their own fiat currency, and it really just became, can you be the least dirty shirt in the laundry, so to speak, right? There was no kind of absolute reference point besides gold, arguably. And now gold has its own issues, most notably the challenge in terms of self-custodying it. It relies on a counterparty for custody in most cases, and as well, it's very impractical for transacting it because it's very expensive to not only store, but also very important, very challenging and expensive to transport. So Bitcoin gets over the gold issues by, first of all, having an absolute fixed supply, not something that's based on any elasticity at all. So gold, highly inelastic, but still has some elasticity, but also is built for the internet age, where it can basically be transacted and settled instantaneously or near instantaneously for almost no cost, and can be borne by the owner without any counterparty risk involved. So global permissionless settlement layer, neutral and completely apolitical. And this kind of creates a situation where there's much more challenge in running persistent debt financing, deficit financing by governments, because there is now this alternative that people from that society can kind of escape their wealth into, to basically opt out of the unfair financial system that they might be born into. So we see this monetary transition as sort of a technological upgrade, and one where the capital of the world that is presently being invested in inferior stores of value will migrate into Bitcoin simply because it's technologically superior, has the better properties for store of value. Now, what makes it a relatively gradual transition is that the awareness of this is not instantaneous. It's not that everybody globally recognizes from one day to the other that Bitcoin is superior. It is a situation where, as Bitcoin network grows and becomes more robust, more people accept it as such, right? So very early adopters who might have recognized the potential and moved their capital earlier were in many ways taking more risks than the later adopters, but also getting rewarded more for that. So it's this kind of gradual thing where ultimately everybody will recognize it, but for now we're still in the phase where a minority of stewards of capital, whether that be individuals, corporations, institutional investors, governments, are on this kind of spectrum of kind of accepting Bitcoin for what it ultimately truly is. Yes. So that's the monetary transition, as we call it. Now, the challenge is most business leaders. So we really focus on the corporate segment. As we mentioned, there's Bitcoin is for individuals, governments, institutional investors, retail investors, but also corporations. And business leaders are flying blind from my perspective. They don't even have Bitcoin on their radar, are not aware of this transition, or if they are, then they don't believe it's relevant for their particular business. And furthermore, traditional advisories, so like the big four consultancies, McKinsey's, Bain's, BCG's of the world, these consultants are either unable or unwilling to fulfill their duty to support their clients in this respect. So there's certainly still a lot of false myths and stigmas associated with Bitcoin that are preventing certain consultancies from at all getting involved, or they simply don't have the experience or knowledge to really recognize what Bitcoin properly is and understand it, to be able to then share that knowledge and support their clients in responding to the transition. So there's certainly a gap. I would say that a very, very small fraction of business leaders are aware of this today, but given the trajectory, it will be the case that every company will need to be capitalized on this in the future. So we see this as a huge market potential as an advisory. So yeah, as we mentioned, we're helping businesses to kind of future-proof their balance sheets, their capital structures, their corporate strategies to benefit, first of all, reduce risk, and then ultimately benefit from the opportunities that emerge through this migration of value into the new financial paradigm. And really bringing together a unique set of skills, both deep understanding and knowledge of Bitcoin and the ecosystem around that, the monetary transition, the traditional monetary and financial system, how it is today, where it's moving to, some perspectives on how that's going to happen, and then combining that with classic consulting skill sets and toolkits around corporate strategy to be able to support companies and business leaders in this shift. So a little bit about some signals from the market. BlackRock is now, has the IBIT ETF, the Bitcoin ETF. This is the best performing ETF of all time. It's only been around for 18 months or so and has already accumulated something like $90 billion worth of AUM. And folks like Larry Fink are talking about how Bitcoin is becoming an alternative to the US debt-based monetary system that we're in today. And there's risks of this kind of becoming more widely acknowledged by capital markets participants. Even this week, Ken Griffin from Citadel was kind of sounding the alarm with a very similar and more direct tone. Ray Dalio as well. talking about this. He's a bit more of a proponent of gold over Bitcoin, but the premise is about the same. Here in Scandinavia, we have Kjell Inge Røkke, released a letter back in 2021 to his shareholders of Aker ASA, and explaining where his perspective is on Bitcoin, how it can become the new monetary architecture of the globe. And he sees not investing in Bitcoin as a riskier decision than taking exposure to the asset. Then we have brand name institutional investors, for example, U.S. states, the U.S. government, large pension funds and endowments such as Harvard and Brown University, a number of pension funds in the U.S. and beginning to be international as well. Norges Bank has exposure to MicroStrategy as an example. Brand name icons in the traditional financial world, as well as institutional investors, are gradually waking up to this. And then we have this kind of intersection in corporate finance. So besides just investing from an investor lens, we see corporations starting to deploy strategies here. We have companies all over the globe now, including in the Netherlands. The Winklevoss twins have backed a company in the Netherlands called Treasury to deploy a Bitcoin treasury strategy. Cantor Fitzgerald has gotten involved in two different vehicles, one alongside Tether and SoftBank called 21, along with Jack Mallers of Strike, and then also a second vehicle that they've launched as well. So there's a number of these new Bitcoin-related treasury strategies being deployed globally. If we look at number of public companies with some Bitcoin on their balance sheet, and how that trend is growing, we certainly see an acceleration, especially this year in 2025. At the end of year 2024, there was about 84 companies that were known of. And now at the end of Q3, we're looking at closer to 190. So that's about 11 new companies per month joining the fray. And certainly that as you can see, the slope of this is accelerating quite a bit, right? So definitely on an exponential type growth rate. If we look at Scandinavia specifically, it's kind of a similar story. There's definitely proliferation of number of companies. We went from 2 in May of 2025 and up to 12 as of October, and also a tripling in the number of Bitcoin held by these companies. If we look at business Bitcoin inflows per year in each of the historical years, definitely seen the kickoff here in late 2024. With that big step change, and then a continuation of growth in 2025. And 2026 is expected to be, I would expect it to be an even bigger slope as this is measured in US dollars, and Bitcoin is gaining in price as measured in US dollars, sitting at about $125,000 today. And then the BitcoinTreasuries.net website is a good resource to go to kind of get a broad overview of the entities that are holding Bitcoin. And relevant metrics around them. So what do we do as Orange Wheel? Well, our offering tends to come in kind of three phases with our clients. So the first phase is the executive education piece. This is where we will begin with a seminar with the kind of top management of a business, and possibly also some or all of their board members, and provide kind of a half-day seminar, either in person or remotely, and kind of take the audience through the key stuff they need to know to understand the Bitcoin thesis as such, to really build that understanding, conviction as to why this is not just any other asset where that might mean revert, that there is this kind of continual growth that is expected to occur. What's driving that growth of the Bitcoin network? Why can they have confidence that will continue and not crash to zero over the next few years? And then also get a glimpse of the types of strategies and optionality that is presented to corporations, and some case studies and examples around there. We can also do more tailored educational services. So rather than our kind of standard one, we can also make something that's a bit more specific for a specific audience. Then the second step is the really fun part. So this is the strategy piece. So once a business leader's management team is aware of the Bitcoin thesis, how it can apply to businesses as such, then it's about really looking at their particular circumstances, doing some proper analysis of that company's position, its financial position, the industry it's in, its nature of its relationship with its stakeholders, market dynamics, maybe even looking at then kind of their purchasing and inventory habits and so forth, to be able to kind of get that kind of strong view of the particular business. And then in conjunction with subject matter experts from within the company, who can bring kind of a holistic view. We can do a workshop to then apply the Bitcoin lens, the monetary transition lens, to the company's particular circumstances to identify relevant opportunities, and then also ideally, prioritize them and select relevance initiatives that could then be deployed. And then lastly, being able to kind of then maybe do a double click on any of these specific initiatives, do some further modeling to help finalize some of these decisions of whether to kind of proceed or not proceed. And then the last stage is implementation planning and support. This is where we can then look at that list of initiatives and help sequence them, help to advise on which service providers would be most relevant most appropriate for supporting that client company. This could be OTC desks, custodians, could also be Bitcoin mining businesses if that's part of their strategy. It could be payments. And we really bring kind of an independent perspective. So we're really trying to bring in what's the most appropriate service provider, not necessarily somebody that we're directly affiliated with. We can also provide the project management support through the implementation phase to help kind of orchestrate some of that work and communicate and relay information back to the management team. And then also support on stakeholder communications. Yeah, to get a flavor for what would be in the executive seminar syllabus is some of the stuff I mentioned earlier. So kind of really grounding a good understanding of the history of money, the current monetary system, Bitcoin, and why it is the next evolution of money, and then the implications for corporations and investors. There's also a new piece we just added, which is on the intersection of Bitcoin and artificial intelligence, which is also quite fascinating and relevant for today. And then there is also, I think this perspective, I'm just going to pause for a second here on the sharing, I think. Okay. Yeah. So I think there's certainly misconceptions, myths, and excuses why companies will often disregard or ignore Bitcoin. And I think it's just part of the messaging we really want to get out to the business community is that these are indeed myths and misconceptions, and Bitcoin really should be on any company's radar. So there's kind of three broad kind of levels, I think, here. The first one is the misconceptions regarding Bitcoin itself, and this will apply to any person or individual out there, whether it be an individual, a business leader, a retail investor, whoever. Then we have the misconceptions regarding Bitcoin and corporations or businesses. And then we have those regarding Bitcoin strategies for businesses. So if we dive into Bitcoin itself, I think many Bitcoiners are already aware of these arguments, but a lot of times people still believe Bitcoin is a scam or that it's a Ponzi scheme. There is no owner of Bitcoin. There's no CEO. There's no centralized issuer. So by definition, it cannot be a scam because there's nobody conducting that scam per se. Similarly, it's not a Ponzi scheme per se. It doesn't depend on new people coming in to pay off the previous people who are getting out. And if anything, it's kind of the opposite of a Ponzi scheme. And if anything, our current system is more of a Ponzi scheme than Bitcoin is. Also, it's only used by criminals. There's also a lot of research that shows that indeed cash on a percentage basis is a much more preferred use of money for criminal purposes than is Bitcoin. There's a much smaller percentage of on-chain transactions that are applied for criminal purposes. This is based on results from or analysis done by Chainalysis. Also, this point about intrinsic value. Christine Lagarde was just at a symposium 2 days ago or so where she reiterated this perspective, which says Bitcoin has no intrinsic value. It's not backed by anything, whereas the euro is backed by her. She literally said that. She says, I can back the euro. Now, I think this fails to understand about the Bitcoin network, the energy system that really does tie energy to Bitcoin. So it is backed by real proof of work. Work in this case is computations done on solving the problems, right? Which both secures the network and also verifies that work did indeed go into minting the Bitcoin. So this becomes somewhat abstract and technical in nature, but there certainly is this perspective of a link. It's not something that's just untethered. If anything, again, fiat currency is completely untethered. It can be created at will by centralized authorities. That, in my mind, is not backed by anything. Bitcoin is backed by something much more concrete, if not new and abstract. That's the challenge. This view on governments banning it, I think that's been disproven as well. I mean, early on in Bitcoin's phase, maybe had governments coordinated, they might have been able to do it. Today, there's just too much vested interest. There's too much inability of governments to coordinate amongst themselves to shut this down. And then there's certainly game theory at play, which would say that there's more payoff for governments to defect and to preserve the network than to coordinate to take it down. Then we have this, it's too late. And that is, again, misconception of understanding really what the fundamental drivers are for why the Bitcoin price will indeed continue to appreciate over time. And then it's bad for the environment. And yeah, this is a whole other ball of wax. But I think what the world is starting to wake up to is that Bitcoin not only is it not bad for the environment, it is a good use of applying energy, and it can indeed enable more renewable energy and stranded energy resources to be monetized, and thereby improve the economics that can then build out more renewable energy infrastructure. So usually this whole kind of bucket of argumentation usually leads into this idea that I don't need to pay attention to Bitcoin because it's going to go away. One way or another, it's going to go away, and therefore it doesn't demand my attention. So I think this is the first hurdle to get over with anybody, including business leaders, to say, you need to pay attention because this is not going away. You might not like it, but you need to first at least take some time to understand this phenomenon. The second, and I think maybe the one that's missing here, is also that thing that it's just a niche thing. And again, that ties into this needing to understand the thesis of why it's continuing to grow. You might have been excusable when this was a $10 billion market cap of Bitcoin. Now we're at over $2 trillion, on our way to $10 trillion. So that argumentation also becomes less and less defensible as the asset continues to grow in value. So we get the second one, which is, okay, you might get over the hurdle and say, okay, Bitcoin's something that's relevant, but it's only relevant for investors, right? It's this investable asset, but it's not relevant for corporations. And therefore, I also don't need to pay attention as a business leader because it doesn't apply to my company. And this range of business, this argumentation usually involves, it's too volatile to hold a balance sheet. The investors will never approve of it. Many, especially here in the Nordics, I find most people think of Bitcoin only as a payment side of things, only as a payment mechanism. So they will say, okay, the marginal benefit of this versus other payment options, payment service providers, is limited, which may be true, but I think it fails to capture what Bitcoin really is, in that it is a superior store of value. It's also superior as a medium of exchange, but that's not the primary reason that most companies would embrace it. Then we have this one, which I think is a more challenging one to kind of deal with, because it is a bit of a governance question. But this idea that if a company has retained earnings, it should pay that back to its shareholders rather than hold the money on its own balance sheet and preserve it there. My view is that I think if companies want to have longevity, they should retain earnings and hold it on the balance sheet to be able to invest in growth or other interesting operations when those opportunities arise. I think it's too often that we have companies dying because they pay out all their wealth when they have it, and then when tough times come along, they don't have the opportunity to get capital again. Then they have to go to kind of higher and higher cost debt financing. So they kind of really weaken their ability to kind of have a long-term resilience. So Bitcoin really helps to solve that problem. But certainly, I can understand that some businesses and some investors behind those businesses would expect that earnings are distributed, and that becomes a bit of a more difficult challenge with existing investors to maybe make that change. And then we have, again, similar to I think the payment side of things, companies usually think, okay, once a technology is like proven, somebody will go and just like distribute it, right? And at that point in time, I'll just adopt it like I do any other tech, right? Maybe they see this like, okay, when Windows came out, everybody just went to Windows. I didn't have to do some like really cognizant thinking. I just that's just the way the whole market went. And my company will just go along with the wave once it's mature. So two things there. I think, first of all, what makes Bitcoin a bit different is that, again, there's no sales team. It's not a product developed by a company. And therefore, there isn't really an active body that's going to go out marketing it per se, right? I mean, you could arguably say that we as advisors are kind of marketing it. We're trying to educate people on it, but there's no active sales team. Secondly, the real benefit, now certainly every company will be on Bitcoin at some point in the future, but the benefit lies with those who recognize the shift earlier and react earlier. Again, because of the way Bitcoin is providing disproportionately high returns as it monetizes, as it sucks in the wealth from those inferior sources of value asset classes, right? So we're seeing, as measured in US dollar returns, 50% per year over the last 5 years on average. I think it's actually greater than that. I think it's like 50 to 60%. And we expect that to kind of continue to decrease in gradually, but it will continue to outperform almost any other asset class over the coming decades. So if you miss that wave, your company may, and your competitors catch it, your company might not be persisting in the longer run. So being a first mover in your respective industry is certainly an advantage. And then the last column here, so is like ultimately the argumentation here is, okay, it might make sense for some businesses, but not mine. So this is typically, companies saying it's only for companies in the financial service sector, like banks and so forth. It's only for crypto or fintech companies. It's just another payment technology. It's just another fill in the blank, right? So this idea that it's something that only applies to certain, only brings one certain feature to a business. So again, not appreciating the kind of comprehensive nature and the multifaceted aspect of it. And we'll dive a bit deeper into that in the next slide. As well as this idea that it's a passing fad, that it's something that, okay, yes, there's some companies adopting now, but 5-10 years from now, people will be on to something else. Again, lack of appreciation for the longevity and the macro aspect of this transition and its widespread nature, how it's going to touch all economic actors. And then I think the most prevalent one right now certainly is because the strategy that is currently capturing the most attention is what Michael Saylor is doing. And replicants of that model, which arguably is if you recognize Bitcoin's potential, this is the strategy that will be the most scalable, right? So this is ultimately what he is doing is taking the debt capital markets and credit capital markets and providing a superior products to those markets and using the proceeds from those issuances of credit notes, preferred stock in his case, and then buying Bitcoin for his equity holders, right? So building Bitcoin per share for the equity holders by issuing very, very large tranches of preferred stock that are outcompete credit instruments, corporate debt, and so forth in the US capital markets. So that's a 10, 100 trillion market TAM to kind of tap into. But it's the message that I'm trying to take to the corporate community is that is one strategy of many. And that's not necessarily the strategy that your company, that makes sense for your business. What makes sense for your business can only be developed once you actually look at your own business circumstances, understand Bitcoin's opportunity potential landscape, and then kind of marry those two together to be able to understand what the right path forward is for your business. So again, just to kind of reiterate, right? There's to get over the hump with business leaders is to first let them understand you do have to pay attention to Bitcoin as any person, as an individual, as a retail investor, as any person in the world. It's relevant to pay attention because it's not going away. It also makes sense for businesses. As a business leader, you should be paying attention insofar as you are a steward of the capital that corporation manages. And lastly, even if your business is in a non-fintech, non-financial services sector, and even if it's quite clear that you're not going to try to replicate MicroStrategy's activities, still there's going to be potential interesting opportunities for you as a business owner, as a business leader to take into consideration. So that's the challenge that we have ahead as a business, is to kind of help defuse these misconceptions and myths and then be able to support our clients in kind of actually taking some action, right? But I wanted to kind of just bring this because, again, I think there's this perspective that Bitcoin is only one thing and the opportunity space of Bitcoin is only one thing. I think that's the challenge right now. What that one thing is depends on who you're talking to, right? But many people in Scandinavia, when I speak to, they really see Bitcoin as a payments thing, which it is. But again, it's not only that, and they don't necessarily see the incremental benefit of it versus their traditional payment service providers. Treasury, again, there's that kind of perspective that it's just a treasury asset, again, which it is. And I think treasury would be core to almost every business's Bitcoin strategy, using it as a reserve asset. But again, it's not necessarily only that. We also see the opportunity to raise capital using Bitcoin type products that are on the market. Once you get to the point where you start seeing Bitcoin as as an option to invest capital into, it's also then change your frame of reference for capital allocation. So if you can always take free cash flow and buy Bitcoin, which is growing at 30 to 40% per year, what does that mean for other investable opportunities that don't compete with that are only generating 10%, 12%, 15%? To what extent do you have to rethink your capital allocation strategy as a business? And then certainly for companies in the energy sector, there is, I think, very interesting opportunities for integration of Bitcoin mining into energy systems. And this is also, I think, where we're seeing the integration of a convergence between Bitcoin mining, AI compute, and energy systems, right? Electricity systems. So this is, I think, a very fascinating area. And again, if you're an energy business, you might think of Bitcoin, only the Bitcoin mining side of things. and then not have a perspective on the treasury and payments and so forth, right? And then you have communications, and I think really being able to differentiate yourself as a business to employees, to potential candidates, to in the case maybe some of your customers, positioning yourself as a forward-thinking, innovative business. There's certainly some benefit that we see there as well. So just to give a view of there is this kind of range of opportunities, and Bitcoin isn't really just one thing that people might perceive it to be. Before I wrap up, I'll just highlight that on the Orange Wheel website, we have research reports. There'll hopefully be more forthcoming, diving into different industries and how Bitcoin strategies are being applied in different sectors of the economy. And that's it. So with that, I really appreciate your attention. Thank you very much for watching. Look forward to next week having more guests on the podcast for interviews. There's been some really exciting developments as we hit new all-time highs, as new businesses adopt Bitcoin and Bitcoin strategies. So there's going to be some fascinating conversations to be had in the coming weeks. So wish you all a great week. Thank you very much.